let's talk about how this new mortgage rate affects the investment.
Yeah. So, and if you have been listening into the show for these last 2 months, it's been a fun journey. When we did our quarterly real estate market update, I shared an update of what JWB would estimate the interest rate to be on a property evaluation for one that you're investing with JWB based on what the market is performing at as far as an interest rate. And originally, 2 months ago, that was at 6.75% interest rate. Now, that was a lot lower than 8%, which is what the general public was getting at that time. And because of our relationships with our lenders and because of the incentives that JWB was offering and still is offering, we were able to get an interest rate at 6.75% at that time. But that was 2 months ago.
Yeah.
Now, overall, as interest rates come down, what I wanted to show everybody here is how much more profitable does it make that same exact property that you're buying at a lower interest rate? Make sense?
But first, we start with a little advice.
We should.
Yeah,
we should. And you should do your own due diligence when you are thinking about making an investment. Do your own due diligence. We're here. We're having fun. We're providing education. And all the data that I put in front of you is based on historical data and assumptions. But you know what? Those are estimates. It's not guaranteed. So do your own due diligence. Do yourself a favor. And, make sure that you keep attending this show and keep listening. But also don't stop there. Go a little bit farther before you put your own money into work.
Makes a lot of sense to me, man.
Cool.
Yeah.
Well, good stuff. So let's start with what that property, one of a JWB investment property, how much profit would that contribute over the 5 profit centers? And this is built on the expectation that you're a buy and hold investor. So this is a typical purchase price. This is a 30-year fixed rate mortgage. And this is assuming that you're holding on for 20 years. That's what all of these numbers are based off of. And at that 6.75% interest rate, we can go through the line items here, but you start to see some pretty high numbers here. Is this still a good deal at 6.75%?
Looks better than what other things I've seen. Yeah.
Over 20 years, the total profits earned are over $429,000 estimated based on historical assumption, things that have already happened in Jacksonville and based on JWB's management of the asset for you. And that equates to an 8.9% internal rate of return. That's your return on investment each and every year that you're investing there. So over $53,000 in net rental income, over $10,000 in tax savings, over $62,000 in principal paydown, and over $303,000 in home price appreciation. So those are those profit centers that all combine to create the big picture about why you're investing in this asset. And the cool thing is that this asset wins at 6.75%. Yeah. Imagine what happens when that interest rate drops.
You don't have to imagine because we're going to make the numbers real. What we have learned on this show is that we can talk about all these lofty concepts, and we tend to talk about concepts for like 1 to 2 to 3 months at a time. And then finally it actually happens and then we can actually show it, right? So now we're going to show the difference between this investment, which looks pretty good, to an investment with a 0.5% drop in interest rate, 6.25%.
Exactly. Again, same asset, same purchase price, same 30-year loan, same hold period of 20 years, all of those same metrics there. The one difference is your interest rate 6.25% instead of 6.75%. Well, what that does from a net rental income perspective, it takes it from about $53,000 to about $64,000. So just simply by that interest rate over a period of 20 years, right, that's $11,000 more in your pocket because the long-term interest rates came down. Tax savings go up as well. Your principal paydown goes up as well because you have less interest that you're paying on your mortgages. Home price appreciation doesn't go up. Why doesn't that go up?
Because home price appreciates based on the market.
Right, exactly.
Yeah.
But what you could make an argument for is that we know overall when interest rates go down, that increases demand for the asset. That's why if you look over history, you see periods where interest rates declined 1% or even more. You see substantially higher home price appreciation the following year. That's why on this show, I'm telling you, you want to be buying before interest rates go down as low as they're going to go, because you're going to see home prices go up.
Yeah, you're going to capture that appreciation of the asset. You could also argue that if downtown happens, then that home price appreciation rate is going to bend, and
it's all about demand.
Go a lot faster. It's going to create more demand.
Exactly.
Yeah.
Downtown is a huge catalyst for demand, just like interest rates going down is a huge catalyst for demand.
Got it.
But we didn't include that effect in these numbers here. I just assumed that home prices appreciated the same rate, but still over $300,000 there.
So simply put, 0.5% drop in interest rate creates 11,000 more in rental income for the year. Sorry, 11,000 more in rental income over the 20 years.
Right.
Right. About 1,000 more in tax savings, about 3,000 more in principal pay down, and then same home price appreciation. And it creates a 0.4% better return over 20 years.
Yeah, absolutely. All in all, it's about a $15,000 net positive just simply by investing in an asset at a 6.25% interest rate rather than 6.75.
I like that. I like that. But GC, what if it drops even more?
Well, the interest rates that a lot of folks are seeing right now is 5.75%.
Okay.
And so on our estimates for our pro formas, our evaluations, you'll see 5.75%, which, man, when you get in the fives, sounds so much better than the sixes, right?
So much better.
And sixes sound so much better than the sevens, right?
5-minute ads, you know.
There we go. 5-hour energy.
Yeah.
I mean, there's something to this.
Yeah, something to it. Something to it.
Well, you're going to see a similar effect here, right? Now, instead of $53,000 of net rental income over a 20-year period, now at a 5.75% interest rate, that number is now over $75,000. Tax saving goes up as well. It's now over $12,000 of tax savings. Principal pay down is over $67,000 of principal pay down. And home price appreciation, again, this is probably an under promise and over deliver moment here. We're going to keep that, stagnant, saying it's going to appreciate the same. But all in all, you bumped up another roughly $15,000 in total profits simply by going from 6.25 down to 5.75 for the interest rate when you acquire.
Which leads us to a grand total of 2 months ago, it was at we were seeing this happen at 6.75%. Now we're seeing this happen at 5.75%. And the difference of investing right now under these conditions are an extra $12,000 in net rental income, an extra $2,000 in tax savings, an extra $5,000 in principal pay down, and an extra 0.8% IRR over that 20 years.
Mm-hmm.
Pretty impressive, man.
But what about those folks that bought properties like I advocated for them to do at a 6.75% interest rate? Pablo, are they screwed?
No, I believe that the people that bought that 6.75% interest rate are going to hold on to that a little while longer, or up until that once the rate makes sense to refinance and they can cash out some of that equity, get that lock in that lower rate, because as I have learned, thanks to this community, you marry the asset and you date the rate.
Such a good little slogan there. I love that.
Who said that to us? Was it like Sarah or something? I think Sarah.
I don't know. It's been vernacular for a lot of folks in the mortgage industry for a long time. It makes so much sense when you're making the investment decision.
Makes a lot of sense to me too, man. This is getting very real. So this whole idea of, first of all, didn't you just show me a chart that said rates are in the like it's at 6.61%. What's up with this 5.75%?
Yeah. So here's the other reason why I really want you to consider adding to your portfolio right now is as interest rates have gone haywire over the last year and a half, JWB stepped in to offer an incentive for everybody to help get that interest rate down as low as possible. That's not something we had ever done in our company history before, but these were not normal times when it came to interest rates. And so JWB offers a concession, which helps our clients' interest rate get bought down. And it comes out to roughly about a $5,000 incentive that JWB contributes to the client. And that can either be a cash receipt of $5,000, or the client can decide to use that to get their interest rate as low as possible. But we're only doing that because interest rates have been so high. I've been sharing with you all that it won't always be that way. As interest rates continue to come down, we're actively considering, when are we going to stop that incentive? Because that's not normal for us. So we are continuing to offer the incentive right now, even though the interest rates that we're seeing for our clients are at 5.75%. So another reason for you to think about taking action and starting to add to your portfolio right now, not only do you get to, of course, see more profits just because of the lower interest rate when it comes to cash flows and things of that nature, you also have the opportunity to get in before interest rates drop lower, which we see over the course of history leads to getting in before home prices appreciate more. But you also have this incentive from JWB still. And so if anybody is considering adding to their portfolio, this is a great time. If you're a current client, reach out to your JWB portfolio manager. If you're not a client yet, start up the conversations with us. You can go to chatwithjwb.com and set up your own appointment, or you can just send an email to info@jwbcompanies.com. And we would love to chat with you, because I do think this is a really special moment.